but I'm not including a trade. That's not part of the strategy. Hey there, welcome back to the channel. In this video, I'm going to quickly go over the back testing for the 30-minute orb strategy with a 2-minute 20 EMA pullback. And I'm going to show you guys how you could have traded it successfully today and what the results would have been. So let's quickly jump into it. So I want to just start by looking at the 10-minute chart. I want to point out some key things, right? Thursday, we had this big move down, and then ultimately we closed back up over here. And then Friday was an off day because it was the market holiday, right? So all of this big melt up was a result of just the Asia session and then the London session, and then the market closed earlier. So from there, we have Sunday's open right here, and we make a move down into this range that we just melted up, and we're just sort of choppy. So going into the open, my bias was that, hey, we're going to be range bound, and so watch out for chopping just until we actually break out higher, start to hold over the overnight lows, the overnight highs or underneath the overnight lows, then we're probably just going to be stuck in a range, and I'm not going to be expecting continuation, all right? So that being said, we have the 30-minute orb strategy, right? So the 30-minute orb as defined as here and here. So I have the indicator automatically puts them on. The key levels also does the 15-minute orb, so we'll turn that off. We don't really need the opening print. We'll keep the previous day highs and lows, right? So if we just on the replay just to here, you can see that it's using the prior day's highs and lows from that short session, which is fine. I already had marked it out, and I knew that we were inside of the bigger session on Thursday. So right here, we do have our first 10-minute candle that closes outside of the orb range. Now, I don't like this because it's inside of a massive upper wick before that. And because I didn't like that, and because I didn't like how these subsequent candles were forming and thought that we might trail off back down, which we did, I wasn't too keen on taking the trade, and I thought that it'd be subpar just because look at what happened. We broke over the overnight highs. We were inside of this range. We were inside of this massive down candle, and as you can see, these candles are pushing into this lower wick where there was obvious buyers that would now be sellers, right? So support that would now be resistance. All right, so but if we look at this, and if you had just executed this strategy, just simply following it mechanically, it would have worked, right? I just used discretion, and I sat out from a winning trade. In fact, I just honestly think that today was one of those days where I was just off my game, and so that's the largest part of it. So here's a 2-minute 20 interaction. We're going to go back to just this candle right here. We have full AIM long, so the AIM bot, which means that we have ES, NQ, and VIX agreements. So we have our 2-minute 20 interaction. We close right on it, which is fine. We're closing right on that orb high pivot. And the next candle, what the next candle does is it wicks down. So since we closed under it right here, what I would like to just see is what's happening. That candle wicks down, and you could have entered when either that candle turned back green, and if it was fluttering and it turned back green and then it wicked down, you still wouldn't have got stopped out. So we're going to put the entry just a little bit above that candle's open, which is right about here, and the stop would be below this candle's low. Now, why would it be below this candle's low? Because this candle is the open of the 1020 candle, which is the one that actually closed above the orb. So look, this is your 1020 candle, the candle that closed above the orb. So when you enter, the stop goes underneath the candle that closed over the orb. Very simple and repeatable. And then your target is the high of day. You can see the stop is at 86, the entry is at 0.8, and the target is 57. So it's over a 2-to-1 risk reward, which is fine. And if we watch out, how does this go? You almost get the target in 2 candles. You get it in 4 before it comes back down. Then we'll let this play out a little bit more, right? It has ended up failing, right? But you would scale here at the high of day. One other thing that I've been looking at in terms of the potential targets is if you marked the fib, if you just looked at roughly how far price retraced and you were going to scale out of your position, this would be the place to do it. That just seems to be the safe place to scale out, and that would be at 22. So you'd really only be scaling out for like 14 points there, and I'm not a huge fan of that. I want to see that this is going to continue. So the target's relatively close. I wouldn't say that I would scale, but I would be thinking about maybe I should move my stop to break even now because I've moved back halfway into that range. All right. Because at the end of the day, the number one things that a trader should be looking out for is risk management. So that being said, let me just put that back on there. So we're going to go ahead and log this into the tracker. So there we have it. We have the first trade logged here, and we'll continue to add more as we backtest, right? So I'm going to add a note here. So there we have it. It says a target of 48 points, risking 22. So now if we will delete this, we don't need these anymore. Let's go back and look at what happens. The 10-minute candle, it busts right back through the orb high again. And this time you're seeing a lot more strength. So when you see that strength, again, if you come back down to the 2-minute time frame and you look, boom, there it is. There it was. You see that 2-minute 20 EMA interaction? It hits there, it closes back above, and you're seeing that ultimately, I just want to go back and just remove this candle. Ultimately, you are seeing that price is flagging upwards, right? And we're holding this here as support. That's what the buyers are telling you. The buyers have already told you they held a higher low, and now you're seeing that this ultimately is being defended, this area here, and the buyers have bought it back up. So what I would do in this situation, knowing that we just had a very explosive 10-minute candle, like that tells me that this trade setup is stronger. So when I see a trade setup like that stronger, I will look to say, oh, I'm not waiting for another interaction. It already interacted. It popped back up. I'm just going to enter in long on the open of the next candle, right? And that's where watching the candles close makes the most difference. So now, where should my stop go? I said the bottom of the low of the candle that rebroke the 10-minute 20, or sorry, rebroke the 10-minute orb high. But you've already had a couple other candles here that have been now part of this flag. So that's where you can tighten the risk up and put your stop below this candle here at 31. Now, where should you target? Well, you're already pretty close to that high of day, right? And so you can target there, and that would just be 1-to-1, a little bit better than that, and that's fine. There are plenty of traders who are very successful with a negative RR. So this fallacy that you need a 5 or 6 RR to be profitable is just not true. So let's just let a few more candles play out and see how high this goes. Now you see it comes back down to the entry again. So if you missed it, you got another opportunity. I missed it, unfortunately. I was away from the desk and then I came back and I was still evaluating what was going on and it happened and I missed it. There you go. You get your high of day breakout and you scale and you take your profit and then look what happens. This is exactly why you take profit where you're supposed to take profit. This is a very systematic trade. So we're going to go ahead and log this one too. So we've got 2 wins logged on this tracker, 2 wins for a total of 78 points while risking a total of 45.5. So a little bit less than 2-to-1 on the total day. Let's just check out the rest of the day on the 10-minute chart and see how we fared versus that 20 EMA. Closing back above the orb there, then it fails. So we're reclaiming the opening range. So we can go drop down here and look to see if we get another trade. And we did. All right, I wouldn't take these trades. Frankly, I'm not going to include these. I won't take a trade at 3 p.m. like this. This is just completely outside of the realm of my normal trading. I don't even know how this trade plans out, but I'm not including a trade that occurs that late in the day. That's not part of the strategy. Typically speaking, by 1 p.m., if it hasn't happened, it ain't going to happen. So we're not doing anything after that. All right. So that concludes the video. That's a recap for July 6th. That's 2 wins logged in on the tracker. In the future videos, I'll do some back testing as we do the forward testing. So we'll just keep adding days and we'll keep clocking how successful this strategy is. I know that the win rate is over 80%, but we're going to prove it together. As always, don't forget to like and subscribe, and I will see you in the next